Thanks so much for tuning in to this Q2 conversation with Anupam Rasayan. The case for a chat, of course, the results for Q2, the product pipeline, they were very wide one. How soon will the launches happen? And the CapEx plan that they are on, which enables them to launch products in the fluorination category. So Vishal Thakkar is the Deputy CFO of the company Johnson right now to talk about all of that. Vishal, good having you. Thanks so much for joining in. I was I was intrigued when I looked at the commentary over the last couple of quarters and the performance largely from chemical companies, not just you. You guiding towards a 25% CAGR odd for the next 2-3 years. But the space itself is not quite looking that strong. Your first 2 quarters are not bad, but it's a flatline performance, if I'm not wrong, on the revenue front as well. So what's happening in business, and do you expect it to be back-ended growth?
Neeraj, good afternoon, and thank you for getting us again. Great having to chat with you. You are right that the numbers have been flattish, like we did 320 crores this quarter, and if you look at consolidated, it was 396 crores. So yeah, you can say that yes, we have been flattish with a very, very marginal 3-4% growth on the quarter side, and on the half yearly, if you look at it, will be around about 11% in terms of the total consolidated revenue growth. So yeah. It has not been the numbers that we have been looking at it historically. Second, you mentioned about the market as well, that yes, the markets are little weaker, and there is a liquidation of the supply chain and the inventories in the system as well. Along with China coming in, there is a bit of a slow growth that we can see in this sector. However, if you see for us and what we have been guiding even in the last quarter and also for the quarter here and going forward, that the growth looks like it continues for us, especially with the business model that we have created and where there are contractual relationships where the customer is very, very keen to go with us. And two is typically they are all innovators with a very, very niche molecules. So the demand is far more stable compared to on the lower end of the value chain, which is where the commodities play, where the demands are plus or minus. But in our case on the CSM side, that tends to be better off. If you see the kind of LOIs and contracts that we have signed in the last half as well, if you see, that is again a testament of a kind of a demand that we anticipate. So as you rightly said, yes, there is a bit of a back-endedness on the growth side, but we feel comfortable growing even this year as well. But 2 to 3 years outlook, if you look at it, we are looking at continuing the growth momentum that we had in the past as well. So that's where I would put it.
Okay. No, just trying to understand. So there are opposing forces or thoughts at play here. There are people who believe that largely for the chemical space, maybe even spec chem, there is a phase of inventory destocking. This might be going to the last phase and then restocking happens. And there are some people who say that there's still out of the woods, and China coming into the play is actually a negative as well, because Chinese products have started to come into the Indian markets, which wasn't the case some time back. Just trying to understand, for you, would the growth over a 3-year period, would the growth be back-ended, or do you believe you stand a good chance of doing maybe 15-20% growth even in this phase in the current financial year 24?
So Neeraj, first let me answer that question first, and then I'll talk about China and other impacts. But yeah, we are looking at 15-20% growth this year as well. When I meant back-ended, I was talking the back-ended of the year rather than the back-ended of the time horizon.
But which means, sorry, just to get that clarity, which means, I don't usually interrupt, but I'm just asking, this means that you will probably do about 25-30% growth in the second half, considering you've done about 10-11% odd in the first half.
I agree.
Okay, fine. Please continue.
No, I appreciate it. And it's a good clarification, so I appreciate that. So yeah, we're looking at a decent growth going forward. And see, if you look at it historically, we have been doing that. It's only the couple of quarters that we have that growth being pushed into the second half. Otherwise, you will see that playing out for us. And if you look at it from a China perspective, China, if you look at it, has been a very, very large player in the lower end of the spectrum, which is on the commodity and other side. But when you come to the spec chem and when you come to the more customization point of view, then I think each of us have a very pretty stable demand profile and a customer relationships which tend not to move just because China has turned on or turned off. So to that extent, I'm not seeing too much of a delta in that. Yes, it will have its own implications in terms of the sector per se. Yeah.
Okay. The other aspect is there was a note from a brokerage house which had visited your plant maybe, and they mentioning that you believe a lot of your future growth will come in through the fluorination chemistry. Now, one, it is not, I'm not saying you're not capable, I'm just saying it's not an easy chemistry to crack for people who are just coming in per se. How certain are you that growth will be immediate as soon as capacities come on stream? And by when do the capacities come on stream? Is there any kind of delay because of logistical issues, supply chain issues, or otherwise?
Okay, so let me first start with the fluorination, where we are and what are we doing. So if you look at it, even before we acquired Tenfac, we were in fluorination. So even that day, my revenue was 10 to 15% of the revenue contributed from fluorination strategy, fluorination products, the fluorinated products. Two, when we acquired Tenfac, that time also, if you look at it, we were having 31 molecules in the fluorination space. The challenge was not the chemistry or ability to deliver the fluorinated products. The challenge was the supply chain, because as you would appreciate in the CSM play, typically customer would want a supply chain solution and readiness before they really get into a long-term contracts with us. And that's what has happened. So once that we could demonstrate that we have the supply chain sorted out, is where the conversation started taking started having momentum and started taking more crystallization of the process happened. And that's where you will see that the LOIs that you see also, a large part of it are coming from fluorination side as well. And even the products that we launched in last one half, we launched 5 products, of which three odd are in the fluorination space. So to that extent, again, if you see, it's not about the capabilities; it is about delivery and the supply chain that is there. And that's something which gives us a fair bit of a confidence. And even whatever validation we have got from our global consulting firm as well, they also have reiterated the statement that we should be looking at around $220 to $270 million of revenue from fluorinated products only in next 3 to 5 years on an annual basis.
On an annual basis in the next 3 to 5 years. Okay. And sorry, just when do these capacities come on stream meaningfully? I mean, and what capacity utilizations do you reckon you can kickstart the process with?
So if you see, last time we announced a capex of 670 crores, of which 2 are for the fluorinated plants and 1 is for the LOIs and contracts. We expect that by the year end we should have that capacity meaningfully available to us. No doubt it will take its own time to ramp up the volumes there, especially on the newer age molecules. It will take it has its own ramp up period, but over the next 2 years we should be able to see that full utilization coming into play.
Okay. By year end, you mean the financial year end, which is March 2024, right?
Correct.
Okay, great. Now, on that very CapEx plan, I just had some questions. So, unless I'm very wrong, I mean, I was looking at the balance sheet as of 31st March versus 30th September, and my colleague Harsh has dug out these numbers for me. The borrowing has gone up from 433 crores to 704 crores. And please correct us if we are wrong here. But 433 to 704, some of the other aspects also, inventory, receivables, etc. Is this largely working capital-led borrowing that is happening or otherwise? And 2, a question again on the borrowing as well as the CapEx. From the quantum of cash flows that you seem to be generating every quarter, the CapEx that you will, some of it is coming on stream, but I believe there is meaningful CapEx yet to be happening as well. Do you fund it via internal accruals or do you use additional debt to do the same?
So let's look at. I'll answer the second question first, and I'll go to the working capital side in a second. So if you see from the capex side, I am sitting with the 404 crores of cash today.
Okay.
So if you look at 404 crores of cash, then I think I think you appreciate
answered the
that.
question. Yes.
Okay, great. Now let's come to the working capital side. Yes, the expansion of the debt, if you look at it, is primarily on the working capital side. And to our mind, that's a more temporary phenomenon, which we believe that should be unwound over by the end of the quarter, at the end of the 2 quarters. So by the year end, you should see that the numbers are more in the range that we have been used to seeing ourselves, and also what we have been guiding in the past. If you even look at the last 1 month's collection, I think that is giving us the clarity that yes, whatever we are planning should come back. So to my mind, it's a couple of quarters spike that you would see, and then it should come back to normalcy.
Any global debt which is up for refinance?
No, none.
Fair call. Just
The
checking.
only thing is we have the only debt that I have is my promoter's debt in USD, which I am repaying on a regular basis. That's all.
Okay, fair call.
And that is around 110 odd crores, nothing more than that.
Fair call. I have one last question, and just trying to get a peek into your boardroom conversations. Everybody is talking about how the situation in chemicals may change at some point of time, but no clarity right now. To your mind, Vishal, and I know you mentioned that it is largely impacting the commodity chemicals, but Spec Chem too has its share of issues because your demand from Europe, demand from the West isn't as strong as it used to be. So my question really is, because you guys would have seen so many such cycles, when does this cycle turn for the better? Is it dependent largely or entirely on when the global economy starts to perform?
So let me. I appreciate where you're coming from, and you're right. I'm like, if you see my last 2 quarters, it's flattish, as you rightly identified. So not that we are not impacted. The only thing what I'm saying is that we are more insulated compared to the other part of the value chain.
Sure,
is one, and so that's one part of it. If you come to the second part of the conversation, which is where do we see from here on? See, I think whatever we have been seeing till now is more a destocking kind of a behavior rather than saying demand destruction part of the game. If I were to put it that way, and if it is a destocking, then you know that it's quarters and not years, and that's where we're coming from. And even if you look at from a demand point of view, even let's say that the Europe is little slow on the demand, whom are we competing with today as a CSM player? Where are we competing with? We are competing with people who manufacture in Europe. So my customer like Syngenta would be buying part of their volumes from Europe, part from China, and part from India from me. Now, if that is the case, or I'm replacing Europe, then I think I'm net beneficiary eventually. Maybe in the short term there may be a little bit of a time, but eventually I'll be net beneficiary because Europe's supplier is a lot more at risk than the Indian supplier. So if you look at the commentaries of European players who are brand owners or the originators versus the commentaries of the suppliers of them in Europe. Like you can look at Lonza for an example, and Syngenta. If you look at the two commentaries are very different. If you really look at it,
yeah,
they are. And then I think if you read further, you will realize that I think we are fairly comfortable. I would say yes, quarters will be issue, but not the years.
Okay. Yeah, well, one only hopes, and for everybody's sake, that the quarters don't extend into more than 4 or more than 6. But that's the. I mean, we'll get to know when we get to know. But Vishal, to you and your team, and firstly, thank you for joining us today. It was lovely talking to you, and to you and your team at Anupam and your families, from all of us at BQ Prime, wishing you a very happy Diwali and a prosperous New Year.
Absolutely. Thank you, Neeraj. Really great having a chat. I think I really enjoyed this conversation after a long time. So thanks for that. And wish you and your family and your teammates a very happy Diwali. And for us, it's also New Year. So more the celebrations for that.
Yeah.
Cheers.
Much appreciated. Thank you so much. And viewers, thank you for tuning into this conversation.
Hi, this is Gautam Trivedi from Nepean Capital. From my team in Mumbai, I wish all of the viewers of BQ Prime a very happy Diwali and a happy New Year, and hope to see you again in the new year. Thank you.